welcome everybody. So I believe that there'll be a lot more viewers logging on as we go by. So welcome everybody and all the viewers from Melbourne, from Sydney, all across Australia, in India, and in overseas as well. So hope you guys are having a fantastic morning, afternoon, evening, wherever you are. And thank you everybody for taking the precious afternoon or evening to learn about property investment in Australia. So my name is Manting. I'm your host for tonight. And on the other side, we have our wonderful special guest, Director of Gambit Property, Mr. Amir. So how are you, Mr. Amir?
Thank you, Manting. Thank you very much, everyone. Hope everybody having a good time during this lockdown and coronavirus situation. Welcome, everybody. Thank you, Manting.
Amir, they always call you Amir G. Is that like a respect term in Hindi language?
Yeah, it is, but you can call me Amir only. That should be fine.
I'll stick with Amir G because I think I know you're a very respected leader in the community as well. So today is the first episode of our 5-part series on property investment. So a little bit about me. I work in the healthcare industry and I'm Chinese origin, and property investment has a very important part of our culture. And my family and I really believe that property investment is one of the best way to create long-term financial freedom and security. So just like viewers like myself and all from Australia and overseas as well, we're very interested to learn from Mr. Amir, who is highly experienced and a really respected leader in the community. So we'll share with Mr. Amir about some of the do's and don'ts in real estate. So a little bit about Mr. Amir, because some of our viewers might be the first time meeting you. So Amir Ji, can you please share with us a little bit about your background and experience in the real estate industry?
Thank you, Manting, and thanks for the wonderful words about me. Look, Manting, I am a civil engineer by qualification and have about 20 years plus experience in real estate, property development industry, and investment property market in Australia and overseas. And I'm very passionate about unique investment property concept in Australia. And look, dealing with international clients, business development is my area of expertise. And look, I'll just tell you a little bit about my company, Gambit Property, as well. Look, Gambit Property is an Australian licensed real estate agency with approximately 20 years experience in building and construction, property development, and property investment industries. Some of the services we provide our client is specialist in market properties, high-end properties, especially the Bayside area, where our office is in Brighton, near Melbourne. Acreage and global land development, project sales and marketing, house and land for especially for first home buyers, and in developments, first home buyer, we help first home buyers, and property investment strategies in short and long term basis. Look, at Gambit, we believe that knowledge is power, and with knowledge you have the power to make informed decision about your financial future, and informed decisions are always the best decision, and that's what we believe in at Gambit Property. Thank you, Manting.
Mr. Bia, thank you so much for sponsoring our show today. So before we started, I would like to play a short video about Gambit.
Yes, please. Welcome to Gambit Property Brighton office. Gambit Property is a boutique real estate agency based in Brighton, a Bayside suburb of Melbourne. We specialize in selling off-market properties with zero marketing cost, no sale, no charge, with free appraisal of your property. We sell high-end properties, development projects, acreage and global land. We help first home buyers and help to build investment property portfolio. Please contact us or our friendly staff for any buying or selling needs. Thank you.
Amirji, so I'm really excited for the next short time we have with you, and I really hope that you can please share with myself and the viewers. So why should viewers like ourselves consider real estate investing as part of our investment portfolio? So a lot of us, a lot of viewers like myself, we're studying or working in Australia, and we cannot avoid renting or even purchasing. And today we're very fortunate to have you on the show with us to share some do's and don'ts in real estate, and hopefully through this Q&A we can really take advantage of the COVID lockdown and have achieve the best possible outcome. So the number one question we have from the viewer is we so far in the last 20 months we have discovered that Australian real estate market is very hot now, but do you think it's even going to get hotter in the near future, Amir G, in the next maybe 6 to 12 months?
Thank you, Manting. I think look, if you talk about the market is strong and hot, after a lengthy period of rapid price and sales growth, the Australian housing market sales rate is in the spring has begun to grow slightly slow. Home sales, I'm talking about the number of sales, not the price. So home sales fell about 10% in August. New home listing are down, and new dwelling construction approvals have dropped as well. It's just in terms of approval and number of sales, not the pricing here. I just have to mention this. Credit tightening along with some COVID lockdown has suppressed sales from June to August, even though mortgage rates continues to fall. Home price in Sydney, Perth, Melbourne, Brisbane continue to climb even as sales and listing are a little slow. The recent home price growth rate for Australia is very steep, comparable to the record rates back in late 1980s. Given foreign students and other immigrants coming in are as well down due to lockdown, it seems the market is still suppressed by the pandemic. Australian house sales are still above the 30 years average, yet the spring season brings an awakening on the market. The moderation is due to house price reaching too high, out of reach, and that is getting out of reach for most buyers. Housing price have risen almost 11 times faster than wages growth over the past year, creating a more significant barrier to entry for those who don't yet own a home. Commonwealth Bank forecasted that Australia's house price will rise 16% over the next 2 years in what they are calling a housing market boom. Now, if you see the 2021, the house price in Australia, as buyers are able to take out more loans at such a low mortgage rates, the competition for the limited supply of Australia home is heating up. And now, what is causing that rising home price? Very important to understand that. So obviously, there are few 4, 5, 6, 7 things which I should mention here. Continuing low mortgage rates is very important. Economic recovery doing very well in Australia. Optimism, fear of missing out. People are thinking the housing price will be more after this. If they don't buy now, they will miss out. Australia's excellent response to COVID-19 transmission is very, very important. Menting business reopening now, increasing optimism for the economy, less homes for sale at the moment, and first home buyers, they are still holding on to their homes. They are not rushing to buy. They are waiting for the market to settle. So, first home buyers uh, are back in the market now. So buyers' demand is mostly being fueled by a surge of owner-occupier rather than investors. Investors are a little bit still thinking what to do, how is the things going moving forward, and looking to take advantage of historical low interest rate and generous government incentives and other increased state of normality. If you see what's going to happen in 2022, main thing like a sort of forecast, a lot of pessimistic views that are likely being revised right now as the buying season begins. Property prices just keep going up and up. So much so that Aussies are pricing themselves out of the market. But surely it cannot go on like this forever. And how the market will go by the end of the year is still up for debate. I predict it will rise like Commonwealth Bank predicting 16%, and as the recent Commonwealth analysis predict again a 20% even. But the rapid spread of COVID-19 Delta variant, things may change. We have to see how we handle all this. So look, we have to look at the property market currently and where it go heading into 2022, Manting.
Amirji, so to my understanding that you mean that the market will continue to rise, but maybe the growth will be slower than it has been for the last maybe a year or two?
Yeah, look, what I mean to say in that is, the way market is going. If you see the market from February to June, the price was going crazy. The houses sold for like a million in like a suburb like Brighton. House sold a million over the reserve price. So from June we see that little bit already um, getting into a right pricing structure. But the way it gone crazy in from March to June, it's not happening at the moment. But the market will be still strong, but not crazy like what happened from February, March, April until June. So that's what I mean. Market will be still stronger, and hopefully when we have more lockdown open, we have most of the people got vaccinated. We open up the businesses, open up other things by government. um, Market will be strong, but when more houses will be in the market for sale, the market can change a little bit, but the growth will be still there, but not crazy like what that's what I mean to say, not crazy like what happened from February to June.
Mr. Amir, before you mentioned about the COVID vaccine program, I just wonder, as the government was saying that maybe in late November or December, the international students will be allowed to come back. So would it mean that there will be potentially more investors coming back from overseas and to compete with the local Australian buyers? So could that impact on the housing prices, in your opinion?
Of course, I think when this international border will reopen, a lot of visitors, especially students and investors, will come back in Australian market, and that will definitely give us strength to Australian property market. And look, this lockdown impact, the lockdown prevent Australians from leaving their homes, which has done a little subdued to the market. In fact, even with some of the tightest restriction the country has seen, listing have only dropped slightly, while the auction clearance rate, are through the roof. Sales continue to surge across Australia, with that 53% higher than it has been for the last 5 years, according to CoreLogic. And despite a ban on on-site auctions, we saw a strong auction clearance rate in the capital cities, according to the domain auction report for July. And pricing keep rising. So despite thoughts the market would see a drop off in a nation closed down, it seems the market resilience is strong. And CoreLogic said there are three main reasons for this. Number one is, most importantly, is increased low mortgage rates. increased buyer demand has stemmed from continuously falling mortgage rates and a saving windfall. This is very important, and I'll come back to this student and overseas investors as well in a second. It is very important to understand what's exactly happening locally first, to understand how it will impact from overseas investors. So Aussies are spending less money because they are stuck inside, and coupled with an increase in the government support incentives, some found themselves with more savings in bank. Not always, not everybody. This is but for people who got a job, they still can work from home. They're not going out, they don't have much expenses, they have more savings in bank. And combined with the range of incentives from Australians to buy homes, those savings were put towards a home deposit, which triggered a rise in sales. And number three is incentives for first home buyers. 2020 saw the introduction of multiple first home buyer incentives from the government, from the first home loan deposit scheme before the pandemic to various state-based grants and concessions, along with incentives for purchaser and construction of new home of the planned property. Now, the question is when this international border open, Manting, will be definitely more people, more people to invest. So I think the investment market for that reason is going to get good strength out of it. Now we have to think if the price will drop in future. That's a big question, and everybody think that way. I think to answer that, yes or no, most experts predict an easing of growth rather than a backflip. That's what I mean as well. What happened from February to June, it might not happen the same, but it still will be growth, but that will be the easing of the growth. And CBA head of Australian economy said he expects Australian properties price will to rise 20% by end of this year, but only 7% next year. But still, you have 27% increase in the price. So while price will still be rising, it will be at a much more reasonable rate than we have experienced so far. Price growth is expected to moderate in 2022 on affordability point of view, but very low mortgage rates will continue to be tailwind on the property market. Despite widespread expectations, property price will continue to surge, and many people believing now is not a good time to buy. Many Australians still plan to purchase homes in coming months. That data suggesting, people thinking, oh, the market is too strong, house price is too expensive, it's not a good time to buy. They will wait till the market go down and they buy. But as again said, at the same time, people have fear to miss out as well. So Australian looking to buy a home was at all-time high at the moment, with young people the most inspirational. And despite the property price increases, first home buyers are going gangbusters. April was the strongest month on the record, as we were up 87% for the first home first 4 months of the year. That was up to 10% of the last month of 2020. So, and regional market is very strong. Buyers had 2021 so far seeking values, aiding by greater flexibility in where they could work. So I think first home buyer were increasingly taking out mortgage, and a lot of these things happening with interest rate remaining at record low and government incentives. Great airplay. The exact nudge of aspiring property owners was the first home loan deposit scheme. People are realizing it's only marginal higher to buy a home than rent. And now this new scheme of home buyer funds announced on Friday, 8th of October, will be good thing for local market. And of course, when the international market will open, we will see a lot of investors in the market, and there will be a competition. There will be more home for sale. So market will be strong, but will be a little bit moderate in terms of the growth. It's not going to be crazy.
Mr. Amir, so in quick word summary for someone like me who's not really good at math, what would be like so interest rate implication for someone like me who bought my first home and I'm looking to buy another investment property? Or what if someone who's new to the game who just want to get into the market? What would the interest rate imply in a few words?
Yeah, thank you. I think interest rate plays a very wide, very vital role in buying property, especially investment property maintain. And if you see the interest rate, Australia's interest rate remains on hold at a historical low for 0.1%, which is a cash rate, the Reserve Bank rate, uh, which means that most of the buyers, especially first home buyer and the owner occupier, can get under 2% interest rate, and around 2% for investors as well. So the Reserve Bank decided that national official cash rate, we keep low as what we have, because the country continues to battle the COVID-19 pandemic. The central bank has long advised that it will not increase the cash rate until inflation rises to a sustainable target of 2 or 3%. Currently, inflation is around 1.75%. In a monetary statement, Reserve Bank governor noted that impact extended COVID-19 lockdown are having on large parts of the country. The recovery of Australian economy has, however, been interrupted by the Delta outbreak and associated restrictions on activity. And GDP is expected to decline uh, in September. But I think that 2 years ago, if you see the interest rate, which is very important, I mean, lower interest rate you get, more you can borrow, more capacity you have to repay because you have to pay less. So that's a very technically we have. Sometimes it's uh, too technical, but it's very simple as well. If you see 2 years ago in September, Australia's interest rate was sitting um, at like 1% cash rate. It was a 1% where people are getting interest rate for 3%, 4%, up to 5%. But in October 2019, it was dropped to 0.75%. And I keep mentioning this is cash rate, the Reserve Bank rate. In March 2020, as the COVID-19 pandemic hit, the Reserve Bank have two emergency rate cuts to, for more lending, dropping the cash rate to 0.25%. Finally, in November 2020, in the official cash rate hits a rock bottom of 0.10%, which is currently right now, and they're holding it for months now. Many people are looking to implement a strategy to provide a safeguard against future rate rise. It one day is going to increase, but it's not going to increase in 2 months, 3 months, 1 year. It might take few years to go back to that normal 1% cash rate and 4 to 5% interest rate, consumer interest rate. So this could mean splitting the home loan into fixed interest component and a variable interest component that enables them to make additional contribution to pay down their home loan faster while rates are at historic lows. This provides borrowers the best of both worlds, stability and predictability of repayments on the fixed component with the flexibility to being able to focus their repayments efforts on the variable component. The cash rate is currently at its effective lower bound, and Reserve Bank has put it in a place, a suite of alternative monetary policy tools as well. A number of structural changes have contributed to low interest rate and low inflation environment over the past inflation environment over the past 10 years in Australia and across many advanced economies. The decline of the natural real interest rate implies that for any given inflation rate, nominal interest rates will fluctuate around the lower average level. Now, interest rate remains lower for longer. I think when the cash rate is considered by a lower bound, it may also have to remain at low level for extended period. And the housing mortgage rates will be lower as well. And when in recent month, if you see, mortgage rates have declined to a historical low, as I keep saying, in the recent months, reflecting to a combined effect of forward guidance. So I think it's good time for people to get the benefit of the lowest interest rate, get into the market. They can borrow more, they have less repayment. In most of the cases, it's easy to buy home and pay the mortgage repayments than rent. Yeah. So I think that's it is and you have to be very careful when you're borrowing. You have to be careful about what is your borrowing capacity, what's your income level, what's your plan, what's your saving plan. So there's a lot of other factors. If somebody needs to understand this in detail, we can definitely, they can call us and we can definitely sit down with them and explain them in detail. Thank you, mate.
Thank you, Amir Ji. Before you mention about the stamp duty now, since 1st of July, what is the current Victorian, the home buyer stamp duty update? If you can just give us a quick few words, and then we can move on to other very anticipated question. Thank you.
Okay, that's good. Thank you. Look, stamp duty is very important because stamp duty is a part of the government incentives. Normally, the stamp duty before this COVID-19 pandemic situation, roughly around 5.5% in Victoria, and every state have a different structure of stamp duty. But I will particularly focus on Victorian and Melbourne stamp duty right now. The Victorian government said it will bring a new premium stamp duty rates for property transactions with a value above 2 million, which would increase the stamp duty payable to 110,000 up to 2 million, which is 5.5%, plus 6.5% of the dutiable value in excess of 2 million. Let's say somebody bought a house for 2.5 million. So up to 2 million, they pay 5.5% stamp duty, which is $110,000. And then 6.5% on top of 2 million, on 500,000, they will pay 6.5%. So, and then stamp duty and first home buyer, the good thing about the stamp duty, first home buyer have no stamp duty. They have zero stamp duty. So full concessional stamp duty. They don't have to pay any stamp duty at the moment. And the premium one, I'll just tell you, it was this premium property general rate of stamp duty, which was 6.5% over 2 million, was is now have different thing. And there was another incentive, which was 50% of stamp duty concession on the value of up to 1 million property, which was running out in July 2021. Now they extended it to I think gone into 2023. So they extended that. So and I explained that about 2 million one. The transactional provision applies where the dutiable transaction or relevant acquisition of the interest of landowner occurring on or after 1st July 2021, but under agreements entered into to the above date are not subjected to new rates. This is a little bit complex here, but not the duties such as apply for foreign purchasers apply on top of these new rates. So because of foreign investors, overseas investors, there is a different duty structure. They pay more than local people. And now a temporary increase in the residential of the plan stamp duty concession threshold as well, which I said it was due to run out on 30th of June 2021. Now for a property up to 1 million of the plan contracts, which meant which have to meet certain criteria, this increase in the threshold applies only to contract entered from 1st July 2021 to 30th of June 2023. So it means they increased this, they extended it for 2 years. Right. So, and two other temporary scheme specified to transfer new residential properties within the city of Melbourne with a dutiable value up to 1 million, and where the residential property has not previously been occupied as a residence, sold under previous contract as a place of residence, or been occupied for the previous for short-term accommodation. A full exemption of stamp duty is available if the occupancy permit have been issued for a residential property for at least 12 months prior to the contract being entered into, and the relevant contract was entered between 21st May 2021 to 30th of June 2022. So it means if you sign a contract, enter into a contract to buy a property up to 1 million from 21st May 2021 to 30th of June 2022, you have full exemptions of stamp duty as well, and a concession of 50% stamp duty payable if again, as I explained, if you go enter into a contract from 1st July 2021 to 30th of June 2022, and the transfer is not otherwise eligible for the full exemption. If you sign the contract outside these dates from 1st July 2021 to 30th of June 2022, if you do that, you will get 50% of stamp duty, which are very good incentives. And another thing is an exception of shared equity arrangement as well, which is this is new. This is comes with this fund scheme government come up with on Friday, 8th of August. These are the arrangements involving the state contribution to the purchase of a certain residential property. In the exchange takes an equitable interest in the home or land. No duty will be payable on the extent to the beneficial interest owned by taken by the stamp. So government will pay 25%. I will explain you in detail a little bit later as well. This is very important. This is a very good thing come government announce on Friday, 8th of October. So in that you have to pay even less stamp duty, and your payment will be very less. Thank you, Maintain.
Amirji, that now it sounds so exciting to just get into the market. So, in your opinion, for someone like me who's only ever bought a few properties, do you think that in your opinion, is it like for apartment or unit or townhouse or even typical houses? As we all know that the median price for a house in Melbourne has exceeded 1 million already. So, what would be something safe for first home owner to invest in your opinion? Something to begin with.
I think, look, at the moment, the current market, main thing is obviously I will suggest only house and land for first home buyer, especially, or a townhouse where you have some component of land, because it's what land is grow. The house price always depreciate. What grows is the land value. So I think a land component has to be there for first home buyer or owner occupier or a new investors. I think they should be looking either house or land, or a townhouse where you have a little bit of land component. Apartment is good, but at the moment apartment market is not very good. But look, apartments are good if you have a portfolio of 2, 3, 4, 5 properties. Apartments are very good for rental cash flow because they give the cash. But in terms of capital growth, there's not much capital growth. Even the commercial property is the same. In investing in commercial properties, commercial property is great for rental yield, but obviously the capital growth is not that great as a residential, and even the land, buying a land. But I think I will suggest a house and land, which gives you capital growth, and if it's an investment property, it gives you rental and tax benefits as well.
Amirji, so with your experience helping so many first home buyer getting into the market, and with all your clients at Gambit, what are some common obstacles for first home owner? What is the obstacles, and what do you have in Gambit that can potentially help these first home buyers?
I think, look, first home buyer first home buyer got a lot of government benefits. The only thing they have to do is they have to do a little bit of saving, which genuine saving, so that they can get a loan. And insufficient saving is always a obstacle to purchase first property. And of course the mortgage, borrowing issues, borrowing capacity, and then finance, unsure about the overall cost, unsure about the location, all these things, not sure when and where to start. But at the moment, it's a very good time for first home buyers to enter into the market due to the lowest, as I mentioned before, lowest historical interest rate. They can get very less repayments, and then plus they will get zero stamp duty. Other than that, they will get a stamp other government benefits, like this home buyer funds announced on Friday, 8th of October 2021, which will be very, very good for them. And we've seen record growth in first home buyers. So I think they have got it right at the moment. And first home buyer always tend to buy smaller places in potential up and coming suburbs. And meanwhile, the time appears to be running out to lock in historical low rates home loan. And after this is very important to understand for first home buyers, especially for owner occupier as well. After NAB announced on I think last Wednesday, and it was hiking it about 2, 3, or 4 years fixed rate for owner occupier loan up to 0.1%. All of the big four banks still offer 2 years fixed rate below 2%. But Westpac is the only big four bank to offer 1 year and 3 years fixed rate home loan below 2%. So we have to see all that, and utilize the interest rate, utilize the government benefits, utilize the benefits you guys got for government incentives. So it's a very good time.
Amirji, I think a lot of us are, after hearing you speaking for the last half hour, we're really excited about using real estate as a tool to help us to achieve financial freedom. But a lot of us are thinking, is it too late now? Or where is the next good spot to buy? Or a lot of us feel paralyzed, or where should we even begin to for the research?
Look, I think it's never too late. Obviously, it's a fear of missing out. It's if the housing price keep growing up like this, you will see that some people will think this is going out of their reach. But keeping the interest low as like this, and government incentives and stamp duty, what I said, it's never too late, and it's never too late. Always good time to buy property. And I think where to buy, for first home buyers, obviously you need to look at the growth area corridor. And again, look, it depends on individual situations, their capacity to hold, their income situation. So where to buy is, I will suggest look at the growth area corridor, where the new infrastructure coming, government building new roads and new schools, new hospitals, and new land releasing there, a lot of people moving there. So from growth point of view, from a lot of other point of view, the growth area corridor, like for example in Melbourne, around Melbourne, if you go west, you will see Tarneit, Thornhill Park, Rockbank areas. In northern suburb, you will see Doreen, Woolard, Craigieburn, even Wallan, that far. And in southeastern suburb, you will see Officer, Pakenham, Craneburn, Clyde. Clyde is very booming. And if you want to go regional areas like Mount Duneed and Armstrong Creek, they are very good for investment and first home buyers as well. So it's never too late. You have to make a decision. And at the moment, as I said before, the buying a property is cheaper than renting a house, because you're paying less mortgage than paying rent.
Amirji, I just wanted to thank you so much for all your time today, and you gave us some insight and to get kickstarted. So if you can please kindly share with us, myself and a lot of the viewers, so what are some useful resources or website that you can recommend for us to, instead of being paralyzed with fear or fear of missing out, where should we begin our research so the viewers have some homework to do?
Look, as I mentioned in a lot of places I talk and discuss a lot of my clients, and I speak in a lot of other international real estate expos. I think we live in an age of internet minting. Information is not a problem. You can go Google, search this, search property, search investment property. You get millions pages of information, right? But we all busy in our jobs. We all busy in day-to-day life. It's very hard to go through those millions pages and find out the right information. The information which is related to you, the information which is suitable for you, with information which makes you comfortable to buy a house and property, is a challenge. And as an expert, you do that. Obviously there are a lot of online platforms where you can research basic research, but once you do that, once you make a mind, talk to some expert. We don't mind helping them sit down and where they are, what their thoughts are, and helping them to give them the information which is related to them, which is suitable for them, and which makes them comfortable to make an informed decision, as I said at very start.
Thank you so much, Mr. Amir. It's like the name of our show, knowledge is power, and investing in speaking to the right person or finding the right platform to gather our resources are very important, because as we all know, we're busy. But I think, like you said, finding the specialist and the expert to talk to is the safest and the quickest and the most productive way for us to launch into our investment. So thank you so much for your time today, Mr. Amir, and our wonderful director from Gambit Property, our wonderful sponsor. And thank you, viewer from Australia, India, all around the world. And in November, we will be back with more insights into property investment, so such as the do's and don'ts for house hunting, like Mr. Amir said, and how to look for a conveyancer, how to find the right legal practitioner to work with, accountant, mortgage broker, how to source the right finance. So viewers, please help us to thank Mr. Amir profusely for the wonderful talk today. And please stay in tune for our Facebook update, and we'll surely bring you even more wonderful episode about knowledge is power, property investment explained episode 2. So see you guys in next one in November. Thank you so much.
Thank you very much. Thank you, everybody. Thank you.
Thank you.
Thank you.